Guy Close. I'm Tommy Grisafi filling in for Scott, who will return on Monday. I remember my friend Dennis Gartman remarking that stocks typically go from the bottom left to the top right. But do they ever experience pullbacks? Do they undergo corrections? Why do I often think of vicious crashes when envisioning the stock market? Buying and holding has worked out great for Warren Buffett. How will it work out for you? Of course, we're not discussing commodities like corn. We're talking about companies like NVIDIA and other exciting firms. Perhaps it's time for a refresher course. What if I suggested reading Reminiscence of a Stock Operator? While we don't have Jesse Livermore with us today, we do have Mr. Craig Bolanos to discuss what a normal correction looks like. Craig, welcome to the show.
I'm smiling in your intro and your tee up because, yeah, I'm not saying people should simply buy and hold because hope is not a strategy. But the reality is, it's funny how everyone's as nervous as a long-tail cat in a room full of rocking chairs, just preparing for a 5 to 10% dip, which is so normal.
Let's talk about how often that happens. The 5%, the 10%, the 20, obviously it happened with COVID. That's not normal, but whether it's normal or not, they still take the money out of your account, correct?
Well, listen, if we're talking about rolling periods, maybe we just look back over the last 20 years. And over the last 20 years, it is not uncommon that we have what I call a 5% gyration with 4.5%, 4 to 5 worth of occurrences in the year. So it'd be very normal to have the market oscillate. I'm talking the S&P operating companies, the DJ, the NASDAQ, to have 4 to 5% moves to the downside in any 12-month period. And in that same 20 years, if I just look at the most recent 20 years, having a correction, which I define of at least a 10% dip from top to bottom, that happens every other year, kind of like clockwork. So I think it's to be expected, it's natural, and it's how we reset the table for larger gains during bull runs and economic advances.
So would you be happy to see a 10% correction? Would you be like, Tommy, I have a lot of money to put to work for clients, or would you have to calm people down?
Oh, you listen. At the end of the day, there are these emotional dynamics of money that we should not run and hide from because it's all about, Maslow's hierarchy of needs. And a big part of this is getting retired and then making sure we stay retired. And I think what that means is understanding that, of course, diversification is the only free lunch. I think we have to question whether or not the S&P 500 itself is truly diversified, given the concentration weighting of the Magnificent Seven. But my answer to everybody is if you're investing for the long term, it's just that, it's long term. And I think if the CPI data tomorrow at 7:30 in the morning, I think any of the movements in oil, any of the movements in Fed rate cuts, all of that could easily bring us back down to 5,000 on the S&P. That would be a normal 5% correction. I'm a buyer right there again in broad-based equities because I think there's value in this market with momentum heading higher as the year goes on.
When I was younger, I used to trade a little VIX at the CBOE. The VIX on the S&P right now, it's pretty calm, right? Historically, if someone was worried, what would you tell someone if they said, I'm worried? Instead of getting out, do this.
Well, the first thing is all I got to do is look at my fingernails, and they're not well manicured, but I haven't been chewing them. So that tells me I'm not overtly worried, but I am paid to anticipate everything that could go wrong. And there is a three-prong attack on the market. I'm going to answer your question in an indirect way. These oil prices have been very, very stealthy in how they've been rising as of late, and we're getting into that danger zone. Anytime you start trading above 86, and we're there, it acts as a tax on the consumer. Part number two, yeah, I'm getting a little bit worried because the over-under's 2.5 rate cuts for the year. Depending on that CPI print tomorrow, we might only be looking at 2. And then number 3, I do worry a little bit about these LLPs, these loan loss provisions I've been talking about with Scott and the banks. It just tells me something's brewing down the road. But if I think near term, what everybody should take away from today is they should reassess their asset allocation, their mixture between at-risk assets and safe assets. People should really pay attention to their market cap. Are they just all mega cap, and in this case, mega cap tech? And then focus on getting into these other sectors of the market. Again, I think energy, I think healthcare, I think industrials. These are places that have been overlooked that can, in fact, perform. And who doesn't want to grow a dividend?
I like your style. We have 1 minute left. What about the miners? I've never been a big miners, but I did have a seat at the COMEX and trade a lot of gold and silver. Why am I waking up at 2 in the morning, old man style, to go to the bathroom and seeing gold up $30 every night? We have about, I think, a minute left.
So, hey, really quick, I think, everyone's going to say, wait, should I be buying gold today? Should I be buying silver today? And gold and silver as a commodity, as an asset class in the last 10 to 15 years has totally underperformed the S&P 500. So then people say, let's put a twist on it. Maybe we should buy the gold miners, the majors. Maybe we should buy the junior miners, and there's some great exchange traded products to let you get the basket of both of those stocks. They too have underperformed the broader market, but I can't deny that with everything happening across the world, the problems in the Red Sea, the problems in the desert, the fact that we're printing trillions and trillions of dollars going back to these concepts, there's a good trend right now. I think the gold trade is slightly overbought, but if you asked me, is there tremendous support behind it? There sure is. So maybe gold is like Tylenol. It's not going to cure any underlying diseases, but it's all going to work as a placebo to make us feel just a little bit better in the moment. And if that's you, a tiny bit of gold might just go a long way.
Sounds good. Hey, Craig, coming from Chicago. Thank God Chicago doesn't have any problems. I grew up there, too. It's the rest of the world that's the problem. We'll see you soon. Thanks, Craig.
Be good.
Yes, sir.